Why does money still feel tight even when you're earning more than ever before? You finally reach that salary milestone. Maybe 75,000, 90,000, or even six figures. And a number that once felt like freedom now feels strangely average. Imagine a young professional living in Austin or Manchester earning around $90,000 a year. After taxes and deductions, about $5,000 lands in the bank each month. But then rent takes $1,850. The car payment $450, insurance and fuel $250, student loans $400, groceries and utilities $600, subscriptions and phone bills $200, and credit card payments another $350. Suddenly over $4,000 is already committed, leaving a small remainder that quietly disappears into social events, travel, gifts, or unexpected costs. The real issue isn't reckless spending, it's silent lifestyle expansion. Slightly better apartments, slightly newer cars, slightly upgraded habits. And once fixed expenses rise, they rarely fall. Add inflation, which has pushed housing, food, and insurance costs faster than wage growth across the US and Europe. And even a 20% raise doesn't feel like progress. Psychologically, we adapt quickly. What once felt luxurious becomes normal, and our reference group shifts upward, making average feel inadequate. Income feels flexible, but expenses become permanent obligations, meaning most of your salary is pre-assigned before it arrives. If just $800 per month of expanded lifestyle were invested at a modest return over 25 years, it could grow to hundreds of thousands of dollars. The true cost of lifestyle inflation reveals itself decades later as delayed financial freedom. Financially intelligent people don't avoid enjoying life. They simply let income grow faster than expenses, keeping fixed costs stable and allowing raises to build assets instead of obligations. Money feels tight not because you're failing, but because modern life expands alongside your earnings. And the real question becomes not how much you make, but how much you keep uncommitted. If this perspective made you think a little differently about your own finances, consider subscribing for more calm and rational conversations about money.